Hi everyone, welcome back to Corporate Decoder, the place where we break down the nitty-gritty of corporate filing so you don't have to. And today we have a doozy, a company that's trying to make its stock look a lot more attractive by simply cutting down the number of shares out there. Imagine owning a pizza and suddenly deciding that one slice is now equal to 15 tiny little slivers. That's kind of what's happening here. So this is a Form 8K filing from Imunon Inc., a company that deals in what sounds like biology or maybe medical tech. The big news is they've officially done a 1-for-15 reverse stock split. What does that mean in plain English? Well, for every 15 shares you owned before this split, you now own just one share. It's like shrinking the number of marbles you have without actually losing any marbles, but the price per marble goes up significantly to compensate. This is often done by companies when their stock price has fallen very low to make it look like a more substantial company and to potentially meet exchange listing requirements on places like the Nasdaq. The company's stockholders voted on this earlier in July, giving the board the okay to do a split anywhere between a 1-for-5 and a 1-for-18 ratio. They decided on 1-for-15, which means if you had, say, 150 shares, you now have just 10 shares, but hopefully at 15 times the old price. This changes the total number of shares out there from about 31.8 million down to roughly 2.1 million. That number of shares is now much more in line with what you'd see for a company trading at a higher price point, making it seem more respectable to potential investors. So starting July 25th, you'll see the new share count and the higher price on Nasdaq for their ticker symbol Imunon. Now, here's a crucial detail. They mentioned no fractional shares will be issued instead. If you would have ended up with a fraction of a share, like half a share, you'll likely get a full share for that fraction. This is a way to avoid the administrative headache of dealing with tiny slivers of ownership. And for most people, if you hold your shares through a broker or bank, your account will just update automatically. You don't really need to do anything to get your new adjusted shares. This whole move is detailed in an amendment to their main corporate document, their certificate of incorporation, which they filed with Delaware. They also put out a press release on July 23rd to announce this whole reverse split process to the public. This is pretty standard practice to make sure everyone who owns their stock is aware of these significant changes that affect their holdings. The filing also mentions a bunch of old registration statements they have on file with the SEC. These are documents used when they originally offered their stock or created employee stock plans. It's a bit of technical detail, but what it means is that because of this reverse stock split, the number of shares these old filings cover needs to be adjusted proportionally. This is to make sure they're still compliant with the terms of those past offerings, especially concerning how many shares are available for sale or as compensation. Now let's think about what this reverse split really signals. Imunon is clearly trying to boost its stock price and make it appear more substantial to investors. A low stock price can be a psychological barrier for some investors, even if the company's actual value hasn't changed. It can also be a requirement to stay listed on major exchanges like the Nasdaq A stock price below a certain range. It can also be a requirement to stay listed on major exchanges like the Nasdaq A stock price below a certain change. It can also be a requirement to stay listed on major exchanges like the Nasdaq A stock price below a certain change. It can also be a requirement to stay listed on major exchanges like the Nasdaq A stock price below a certain range. It can also be a requirement to stay listed on major exchanges. Like the Nasdaq A stock price below a certain change, it can also be a requirement to stay listed on major exchanges like the Nasdaq A stock price below a certain threshold. Can lead to delisting, meaning the shares could no longer be traded on that main market. The reverse split is a tool to avoid that and maintain a more desirable stock image. However, this move itself doesn't magically make the company more profitable or fix underlying business issues. It's more of a cosmetic change. While it might attract some new investors or satisfy listing requirements, it's crucial to look at the company's actual performance, its revenues, its profits, its growth prospects. Does the business itself have momentum, or is it just trying to look good on paper? The fact that they felt the need to do this split suggests that their stock price had fallen significantly, perhaps due to poor performance or a challenging market environment. We don't see any financial tables in this particular filing, which is a bit of a shame because that's where the real story often lies for a company like Imunon in what is likely a competitive biotech sector. Understanding their cash burn rate, their progress on drug development or product sales, and their overall financial health would be key. This filing focuses purely on the structural change of the stock itself and not on their operational or financial results, which is often covered in separate quarterly or annual reports. So what's the takeaway? Imunon has executed a reverse stock split to consolidate its shares and likely improve its stock's appearance and marketability. It's a strategic move to stay compliant and potentially attract more investor interest, but it doesn't intrinsically change the company's fundamental value or its business operations. Investors should always look beyond the stock price and examine the underlying financials, the management team, and the company's long-term strategy before making any investment decisions. And what's your take on this reverse stock split strategy? Do you think it's a smart move or a sign of underlying weakness? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more in-depth corporate analysis. Don't forget to join our Discord community, linked in the description, to discuss these findings further. Thanks for watching, and we'll see you in the next one.